You know that piece of garbage, absolute junk stock I was telling you about, IPO'd worth 20 something, $30 billion. Hasn't made a dime yet. Another stupid app that you chat with, or you send a chat to a friend, and then in like 30 seconds or 60 seconds, it just disappears. I gave you this. So do you guys remember the cartoon Inspector Gadget? And his boss would always give him the super secret, top secret message, and warning, this message will self-destruct. And he'd ball it up and throw it in the trash can that his boss was hiding in and blow up. Warning, this message will self-destruct in 60 seconds. All we need is another chat app. Oh boy, FaceTime. I'm not even going to get started. I can name a million chat programs. And then all the sites, such as Facebook, for example, that you can not only just post stuff, but do a live chat with other people. That company that I'm speaking of, which, by the way, in case you haven't figured it out yet, based off my title, I'm sure you know, wolfstreet.com, Wolf Richter has this article. Junk equity comes to haunt $30 billion startup. Guess which startup I'm talking about? Snapchat. Snap Inc. tried to turn big investors into zombies. It did not work. Snap Inc., the parent of Snapchat, was dealt another... Oh, wait a minute. The fire? Okay. Nothing important. He was needing a little help with Skype. It's done. He already fixed it. Snap Inc., the parent of Snapchat, was dealt another blow today. FTSE, as also known as FTSE. The FTSE Russell, which owns numerous indices for stock markets around the world, including the U.S. Russell 3000, 2000, and 1000 indices, said today that it would exclude Snap from its indexes because of Snap's share structure that denies public investors the right to vote. Are you sure that's the only reason? Or is it all-time low stock price? Though Reuters reported the story after the market had already closed, the shares of Snap fell 3.5% today, which was actually yesterday or the day before, to $13.40, an all-time new low. Shares are now 21% below the IPO price of $17. Back then, on March 2nd, Snap was considered too big to fail. It would have such a massive market capitalization that it would be included in all major indices, including the S&P 500 and the MSCI USA index. Fund managers would be forced to buy Snap shares to keep their funds in line with the indices. Given the relatively small number of shares traded, this buying pressure would push up the price even further. It was simply a matter of creating a lot of artificial demand. That was the hype and hubris. The IPO raised $3.91 billion, that is, of which $1 billion went straight to founders and early investors. On day two of trading, shares spiked to $29.30, which gave the company a market capitalization of $30 billion. Whoever sold anywhere near this price was king. Whoever bought is still ruining the day. But on the third day of trading, news broke out that a group representing large institutional investors had asked stock index providers S&P Dow Jones and this too long. I can't make it work, and I just ruined it. But on the third day of trading, news broke that a group representing large institutional investors had asked stock index provider S&P Dow Jones indices and MSCI Inc. to exclude Snap from their indices due to the non-voting shares it sold during the IPO. Despite all the hype, Snap was never eligible for the S&P 500. It would have had to have had several profitable quarters in a row, which, as you know, is a pipe dream. It hasn't had any profitable quarters, years, anything, nothing. I mean, I know it went public here this year, but still, been around for a little while. And every time they've been asked, how about 2018? Yeah, we're probably not going to be profitable then either. Oh. But you're saying there is a chance I'm going to go all in. No. No thanks. But the hype didn't specify that, and MSCI has since expressed its reluctance about such an inclusion. Other companies, including Facebook and Alphabet, which is of course Google's parent company, have also issued non-voting shares, but along with voting shares, the shareholders can still vote in watered-down form. Snap was a pioneer. It sold only non-voting shares in the IPO, the infamous Class A shares. Public shareholders have no say in the company's strategy, the pay of its executives, the board of directors, and other matters the owners of a company would want to influence. Nah, not here. Why? Because this here is a turd. In old J-Stamp4's opinion. Why? See the last stock price for the reason why without me going into any kind of lengthy detail. And see the other thing I said a minute ago, how it hasn't been profitable and doesn't think it's going to be profitable for the foreseeable future. That's enough reason. All the power rests with the founders who have Class C shares and some early investors with Class B shares. They turned public shareholders into official zombies, and it went downhill from then on. On July 9th, Snap shares plunged another 9% to $15.47 after Morgan Stanley downgraded it to a lowly equal weight due to weakness in its advertising business and ferocious competition from Facebook. This wasn't any downgrade. It was a downgrade by one of the lead underwriters of Snap's IPO. The company was valued at $24 billion after the IPO. It soared to $30 billion on the second day of trading, and by today it had plunged to just $15.8 billion. Not that that's a small amount by any means, $15.8 billion. However, how does a company get to be worth $30 billion and then just a few short months later it's worth half that? Yet nothing changed from then till now. The same company with the same program, the same Snapchat program, and the same losing money, etc. In other words, not making money, not necessarily losing it, but not making any. Is the glass half full or half empty? So anyways, in less than 5 months, 47% of its market cap, or $14.2 billion, has evaporated, and it's still ludicrously overpriced. And I strongly agree with that damn statement. Is this thing even worth $1 billion? How can any company be worth in the billions of dollars when they're not profitable, haven't been profitable, and don't seem to be able to be profitable in the near future, or even not even the not so near future? This is mind-boggling, isn't it? FTSE Russell explained that it would require constituents of its indices to have over 5% of the voting rights in the hands of unrestricted shareholders. If Snap shares aren't in the indices, or do you pronounce those indices? Heard it both ways. They go both ways. Ooh. If Snap shares aren't in the indices, am I saying sea like in this ocean? In the seas? No, indices. Funds that track indices, we'll go with that. It's like indices, will not buy the shares. Since much of the stock ownership these days is via index mutual funds and ETFs, this eliminates a lot of artificial demand. There are numerous operational and financial reasons to stay away from Snap at its current market valuation, in part because according to Snap's S-1 filing, it is likely to lose money until the end of its days. Glory days. Glory days. No glory days here. But these are fundamental reasons that no longer matter in these crazy days of ours. So it's good to know that institutional investors don't want to become public zombies with Snap's non-voting shares. Annie Simpson, an investment director at the California Public Employees Retirement System, also known as CalPERS, that dog underwater goodness gracious zombie walking dead man pension fund, said it best in March. Publicly traded shares without any voting rights in a company totally controlled by just two guys should be labeled junk equity, she told an SEC Investor Advisory Committee on this topic. You're constraining the capital markets in a way you'll come back to regret, she said. Innovation, We're interested in that. But this is an immature attempt to avoid accountability. That's because they have another freaking chat program. Oh, it's like, oh, look, another one of those. Wait, quick, stop, no, help, please. Like Willy Wonka would say. Oh, look, another one of those. Oh, another chat program. Just what we needed in this world. People starving all over the place. People, being robbed blind, credit cards getting stolen, crimes. Oh, we need another chat program to make this world a little bit better. If Snap gets away with this, issuing non-voter shares will become pandemic, and shareholders will become helpless dupes. He, as in Wolf Richter, wrote at the time, perhaps Snap will not get away with it. Next week, we'll kick off a new problemita. The 150-day lockup period ends on Saturday. In August, frustrated employees and investors holding 308 million Class A shares can ask for the shares to be registered, which might take a couple of days, and then they can sell the shares. More shares could be registered later. In total, 957 million shares could be sold after the expiration of various lockup periods. By comparison, Snap sold only 200 million shares during the IPO. So let me guess, we're going to see a flood of people running for the exits. They've already seen Snap, 20-something, high $20. Now it's down to, 13-something dollars. They're going to instantly, whoever has access to their shares are going to sell. Just like, sell. Huh? Did I get out in time? Oh, $8, $7. Sell. Sorry about your luck. Why the hell did you invest in that turd to begin with? Is my question to whoever the hell did. This could be another big drag for current shareholders to look forward to. Thankfully for them, Snap is one of the most shorted stocks out there. In short, shorts buy shares during a sell-off to take profits, thus providing some support. There is nothing wrong with a young company like Snap, struggling to find its niche, struggling to grow users and revenues, struggling with giant competitors like Facebook and Apple out to crush it. It's always tough to start something new, and folks at Snap have done some amazing things, albeit by burning huge amounts of investor capital at a breathtaking rate. That probably should make their stock in this crazy world go up. They're burning through cash at an incredibly insane rate. Market rallies on that stock, baby. Yes. What's wrong is the hype emanating from Wall Street and from the startup culture that creates deca-billion-dollar valuations out of nothing via artificial demand and pump and dump operations for small companies that may never make any profits in order to lure other people's money into it so that both groups can exact their pound of flesh and abscond with it. The amounts of other people's wealth thus being transferred into their pockets are not trivial. And by the way, one of the first videos I did on this subject, one of the first probably 2 or 3, because I've done probably like 6 or 7, I remember the article was talking about how they quoted a millennial who was happy to be one of the early investors. I want in on the Snap, and I got in. I think it's a great idea. And I'm thinking, and I said then, oh my God, the millennials, you morons. You're being taken to the cleaners. Here we are, a few months later, they're being taken to the cleaners. Quick look surprised. Take care.